Hey guys, I'm sitting here on Wednesday. The market is doing some amazing things this week. We have a NASDAQ that made all-time highs yesterday, and we have the S&P, which is on pace for its best week in 2 years. NASDAQ had its biggest up day since November 2018 yesterday. And I was here talking to you guys on Monday saying that I'm bullish for the week. I'm getting bullish. And my case for being bullish is led out of the US. And we've seen just that. We've seen specifically American growth companies, leading a rebound in the worldwide equity markets. And you'll read some fake news headlines on Bloomberg or CNBC or whatnot saying that coronavirus is being contained and that's why we're getting the relief rally. That's not the case at all. It's always been the same case. It's just you have to know how to play the flows the way that I do and understand how the news cycle gets digested in the market. So when I went to bed on Friday with that capitulation, I knew it was because of the dread of the Sunday night opening in China. I knew that once that was past us in the rearview mirror, American investors would get back to doing what they want to do the most, which is buy stocks that rip. And so they've been doing that. We've seen Amazon, we've seen Apple, we've seen Microsoft all near or at all-time highs. We've seen huge flows on huge volume. And one real interesting takeaway, because I'm not only just like this super happy bull guy. I have a bear case too. And as you know, I'm bearish on China. I'm bearish on Hong Kong. In their trading session and everybody getting excited for the possible vaccine and coronavirus, which God willing that happens, you saw a 50 basis point recovery in the Hang Seng, which is down a lot. It's down over 5% this year. So 50 basis points on that news is kind of whatever, nothing to write home about. And the Chinese mainland A shares in Shanghai index went up 1% after being down 10% last week. So, I mean, you tell me. I'm confident. I took off a bunch of my shorts because I was leaning bullish this week, and I knew the whole world would get dragged up and the tides would just get lifted. So I'm still going to maintain my bearish Asia, long US. I'm leaning long for the rest of this week. We've seen a little bit of a key day reversal kind of underway in the middle of the day, so people are taking some profits. Tesla's getting whacked. It's been in hyperspace, so that was to be expected. But these other cases are very firm. Microsoft still bid, Amazon still bid, Apple still bid. And so I'm bullish for the rest of the week. I'm still short China, but on a much lower level than I was from Monday morning. And so I'm going to re-establish a bigger short position in China as it rallies a little bit more as we get closer to the end of the week, going into next week, because that's generally how I do things. That's how I swing trade. I'm always short what's weak, long what's strong. I know where the flows are going in. I know where they're going out, and I want to be on the same side as the smart money, the killer money, with what's causing those moves to happen. So by doing that, we're in a situation where we can make money in all kinds of environments. We're never really caught by surprise, and you'll see that more often than not, you're leaning with the market. And people say, well, you got bullish Monday morning, and then NASDAQ had its best day in 2 years. And it's like, well, yeah, I mean, we had the worst news cycle last week. We had this capitulation in China, worst stock crash they've had in years. What's going to happen? I mean, it was absorbed. It was digested. And we took it all in the chest last week in the US and was still okay. We were firm. So when you see that kind of firm market action, that's the art part that comes from the 20 plus years I've been in the business of tape reading. But the system that I'll show you as a member has a quantified methodology to how you time these things and how you measure the risk reward and how you measure the patterns. So that's what it's all about. Anyways, we'll try not to get swiped to the side. I know there's a lot of distracting news out there. There's a lot of stuff that's going to throw you off your game. It's going to get you thinking, should I do this? Should I do that? Because I'm seeing some guy on TV screaming it's the end of the world, wearing a face mask, or I've seen some guy talking about, oh my God, it's such crazy valuations. And it's like the same tired ass argument I've heard since I've gotten the business in the late 90s. And don't get distracted about that. All we care about, all we want to do is make money. So keep your eye on the prize and stay with your system. Keep improving your game. And until next time, we'll probably go back over some of the information I shared. I anticipate by Friday, I'll give you a more detailed report on some of the trends that I've seen. An interesting asset to keep your eye on the rest of the week that's had a little bit of a reversal today has been oil. Oil's been lagging like crazy compared to the rest of the market. If you look back over the course of 5 years, West Texas crude and the S&P have very similar chart pattern, but since like late 2019, definitely the beginning of 2020, they've decoupled, and the S&P has continued to go like this, and oil's gone like that. Not like that, but like a little saggy, not joining the party, that's for sure. And so today, you're having a little bit of reversal on the selling of coronavirus in oil, and we've seen some pretty big action, and that all bolsters the S&P case. It doesn't really affect my like bullish tech stance on U.S. tech, but broader market sentiment being positive does help that case. So let's keep an eye on oil, and we'll reconvene on Friday. Take it easy, guys.